It does take us to our talk of the tape, whether there's just enough good news to keep stocks climbing towards new record highs. Let's ask Hightower's Stephanie Link, BMO's Brian Belski, Thornburg's Emily Leveille, Steph, a CNBC contributor. Steph, I'll begin with you.
Sure.
I guess that's the question. Is there enough good news to just keep this trend intact?
I don't like the setup into Friday, Scott. I really don't. No, I don't. We are up 8% from the lows, and the expectations for the Fed to be very dovish really is prevalent. 3 cuts are what most people are thinking between now and the end of the year. I'm not sure we're going to get it, and I certainly don't think we're going to get Powell telling us that. So the expectations are high. I know the minutes today were kind of dovish, right? There are some that wanted to go in July. Most think we should go to, in September. Okay, but I'm not sure we're going to get the all clear on we're going to go 75 basis points between now and the end of the year.
Why would he need to do that? Why can't we just get the 25 out of the way first and figure that this is the start of a cutting trend, which we believe that it is?
And I think it is positive for the long term. And if we do see a pullback, I'm all over it. I'll buy it. But we have had such a nice bounce since just 2.5 weeks ago.
That's
up
true.
8%. And we know what the NASDAQ has done. We know what the Mag 7 has done. So I just don't think that the setup is all that great in the short. This is the short run. But long term, I do think it's positive. Cuts are definitely coming, especially because inflation has come down and the labor market is certainly slowing. Not bad, but slowing. So I think they can. I think they will. I just don't know we're going to get a lot of conviction on Friday.
All right. I mean, look, Brian Belski, I don't think your view is all that different from Steph's. You suggest that stocks are pricing in a perfect outcome here.
We do, Scott. Thanks so much for having us on. You know, we like to remind investors that September is the worst month of the year. The good news is that when we have a volatile third quarter of the year, we typically have, on average, a double-digit gain in the fourth quarter. I'm with Stephanie. We said it on the network last week when we were on the halftime show. I'm doubtful at 3 cuts. I really am. You think Powell's going to cut rates when the stock market's at all-time highs? Number one. Number two, we are one macro data point from the market being down again. We are in a very, very, very reactionary type of market. And, you know, how many times do you say momentum on the network every day? So we think that the likelihood of some sort of weakness in September actually could be quite positive from our longer term perspective. We think stocks are at higher levels than they are today by year end, and the bull market continues, but we think we're going to see some volatility first.
I mean, stocks at record highs have nothing to do at all with the fact that inflation is coming down, right? And they need to get their rate, which is way too restrictive, they've admitted it themselves, back towards whatever they think normal is. It has nothing to do at all with where stocks are at the present time. You actually think they won't cut rates in September because stocks have done well?
That's just one data point. Remember, the stock market is part of the leading indicators, number one. Number two, I think the more that Mr. Powell talks about the dual mandate, I think the more he's going to be sounding more and more hawkish. And I think people want the dove, and I think they're not going to get as dovish as we think. And I think there's a very good chance, Scott, that we see an overreaction for the market, and we would love to pounce on that because we do think we're going to make what they like to call a bit of a higher low here in September, which we do think is going to be a great buying opportunity.
So, but don't you think, I'm sorry to keep going at this, Brian, but I mean, don't you think they've made the point that at this stage of the game, they're a little more concerned about the labor market than they are inflation? So you talk about both sides of the mandate. It feels like we're sort of back to even here with the bias on more fears about the labor market than inflation.
I think that's true. But look at these retail sales numbers. People are still spending money. I know we're going to talk about Target here in a little bit. But also, remember, a year ago, the opposite was happening. Bonds were selling off. Yields are going higher. We were worried about inflation. I'm not quite sure we're going to get as clean of an inflation number as everybody thinks. And any kind of tick that may surprise people, again, reactionary could cause people to make a mistake, I think, and sell, because longer term we want people to be invested, Scott. But we're involved in we only buy stocks if they're going up type market, quote unquote. And I think we're going to get a better buying opportunity, especially given the fact that everybody and their mother, brother, sister, cousin, uncle loves everything right now, is believing this big rally. Remember, it's August. We have lower trading volumes. We have a lot of volatility. So we think there's a very good chance that we get a better pullback. Doesn't change our longer term view of being in a big, giant bull market, but we think things have gotten a little bit ahead of themselves again.